2023 was a strong year for ETFs, with total inflows crossing $500 billion, $100 billion of that coming in just November alone. Investors piled into U.S. equities and taxable bond funds this year, as well as, what else? Large cap stocks, single stock ETFs, and cryptocurrencies. So here now to take us inside the numbers is Vettafi Head of Research Todd Rosenbluth. Todd, thank you very much for being here. Let's talk about the trends in the flow show of 2023. What really stood out to you?
Well, we started the year with a lot of investor interest in fixed income, short-term fixed income, protecting against rising interest rates. The last 2 months have been $100 billion each. November and December, as of yesterday, according to Vettafi data, we've seen money going in to ETFs, particularly large-cap equity ETFs. SPY, the S&P ETF from State Street, has actually been driving that significant inflows in the month of December as people prepare for year-end heading into 2024.
If you take a look at the way things have shaped up for 2024, what do you think is going to be the big thing, thematic, ETF-wise, that's going to draw the most attention and money in?
Well, the most attention is certainly going to be a potential spot Bitcoin ETF being approved, likely in the next week or two, and then launching soon after. And we expect at the exchange conference we at Vettafi host in February, there'll be multiple products that are there. They're lining up to do so. We've got Bitwise and BlackRock. Grayscale is likely to be able to convert their trust into an ETF. That's going to be the story to kick off the year. And then it's going to be what happens with the Federal Reserve, the number of rate cuts that are going to happen, and do we get a rotation towards value and more defensive investing as opposed to the risk-on growth that we've seen so far this year?
Do you think it's going to be more of an attention getter, bond funds and crypto funds versus stock ETFs, which is what many people just think about when they think about ETFs?
Yeah, so stock ETFs are still going to be driving the lion's share of the inflows year after year. It's whether it's a risk-on or risk-off environment. But we now are seeing investors rotate into ETFs to get exposure for their bonds through TLT, for example, that we saw. 20-plus year Treasury was the most popular fixed income ETF. We've seen crypto as a way of getting exposure using ETFs. You were talking about gold earlier, but equities are still king in the ETF space.
So, Todd, when you look at the passive nature of investing right now, and SPY just blew off all records from what we've seen previous to it. Does it make it so that people through passive investing are buying larger cap names, or do you think they have a shot at, obviously there's ETFs for small cap names. Do you see them jockeying for position on the attention of the consumer?
Yeah, I mean, we've seen small cap rally in recent weeks and months as rates have pulled back. The iShares Russell 2000 ETF, IWM, has certainly performed very well. We've seen other products that are doing well. I think if the market broadens out, as is likely to happen in 2024, we see more small cap, more equally weighted strategies gain attention. RSP, which is the equal weight S&P 500, pulled in top 10 net inflows for the year, despite significantly underperforming the broader market. So there's largely an ETF for most exposures that people want.
And what about this idea? I mean, we mentioned single stock ETFs being a huge kind of like growth area. It's not an absolutely large part. But what part about the stock market do you think? What kinds of stories, what kinds of companies are going to be driving that ETF stock narrative in 2024?
Well, we saw in 2023, it was Coinbase, it was Tesla, it was NVIDIA, and there are leveraged, 1.5 times leverage ETFs that exist for people who want the ease of use instead of buying options directly. We're also seeing options use in other strategies through covered calls. JP Morgan's JEPI has been extremely popular. It has helped to drive actively managed ETFs. And so I think we're going to see more adoption of actively managed ETFs heading into 2024, whether it's a more single stock-specific approach to it, or it's going to be a broader market that's more defensive as newer entrants have come into the market.